Let's compare the South African rand with the Japanese yen. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We go here to Forex, Arabic and African bases. So in this pair, the South African rand is the base, the Japanese yen is the quote. So here you can see, 35% rally from the low, which is a significant rally here in the Forex market. Pretty close here to the 52-week highs. If we go here to, well, let's first look at the seasonality, because we do not get the seasonality for this pair as such. We are however, able to get the seasonality for the South African rand currency index. And you can see that it is a bit of a messy index, but we do see that May, which is right around the corner, it is one of the weakest months for the South African rand. So that is very much relevant, though June and July are significantly stronger, only to be followed by the weakest month, which is August. So a bit of a messy seasonality. When we look at this pair long term using weekly data points, I find this major cycle pattern. So you have these huge time cycles, rise, decline, and you can see that it does, fit the price relatively well. If you look at some possible future developments, is that there is, according to the major cycle, there is reason to expect some continued weakness. We do have the smaller cycles as well, which, they have done a reasonable job at fitting, real price action, especially recently. You see here the small time cycles. Let's remove the big ones, like that. So the small time cycles have been, reasonably reliable as of late. It suggests that the current rising phase is approaching, the high end of the time cycle, which is why one would expect a pullback on the horizon when it comes to the small cycle as well. Here are a bunch of arrows. So what I have highlighted here is this red 200-week moving average. You can see here with the pink arrows is that it is a rather clear resistance level. Price has had a very hard time getting above it. The only time we were able to get above it and use that moving average as support was here with these blue arrows, and then it did trigger a more significant strengthening of the South African rand, but that you can see that it very quickly deteriorated as we headed towards the global financial crisis. Same thing here when we look here at the .com bubble. That was very bearish for the rand, which means that we did see a relative strengthening of the Japanese yen vis-a-vis the rand during the .com bubble. When we look here at the most recent development, we are again testing that red 200-week moving average, which has been a failure level for a significant amount of time. Hence, the odds do favor that the bears will win out because they have a pretty good track record. When we look at the RSI, here I have painted in these pink arrows. You can see that high RSI has a good track record of, forewarning or nailing the top of a rally. Same thing with oversold RSI has been relatively good risk-reward entry opportunity for bullish positions, because it is rare for us to get substantially oversold. So those are some interesting observations here. If we do some zoom in a bit here, you can see that there have been times where we have been able to break out, peaking a bit above that resistance level, but the key thing is to be able to use it as support. Let's look here at, if we do look at the correlations, we have a minus 31% negative correlation with S&P 500. Looking here shorter term, so now we are on the daily data points. So in this instance, we can see here we have the PPO, which measures the distance from the 200-day moving average in red. We are at an elevated level that has triggered some recent pullbacks. Here are, with these pink arrows, some previous times where we were, a significant distance away from the PPO signal. And in those instances, it triggered, pullbacks. So that is rather significant. Even when we zoom here into the most recent development, in this instance, we did have that distance, and we did see a pullback to one of the key moving averages, like that. So a minus 7-ish% pullback, approaching the blue 100-day moving average. As we saw with the seasonality, that suggests significant weakening during May, and that would corroborate what we have found here in the charts. It is of course fully possible that the bulls will be able to pull off a breakout from the current level. Breakouts are, they do happen, but the key thing about breakouts, above this level here, is that a very large portion of breakouts are retested. So it's very common to have a breakout and then we test the breakout level. And this is one of the reasons why I am not, I have an ambivalent relationship with breakouts, because there are many, technical analysts who are huge into breakout patterns. The primary reason is that it's very easy to create scans that will alert you about, breakouts. But, the problem with breakouts is that, for number one, they are very mediocre bullish trades. The bullish trade here for this pair, as an example, would be to get closer here to the lows and be a part of this significant rally. So from that low to the current level, that is a 34-ish% rally. If we were to rally 34-ish% from the current price, so let's do that, 34-ish%, like approximately here. When you are rallying from a low level, it is much easier to make these kinds of percentage moves, because the impact it has is more limited. But this 34% move from the current level, that is a much, much, much bigger deal. So that is a much lower probability event. And it's the same phenomenon in the stock market. Like getting, a 100% move from a deep low is much easier than getting a 100% move from a new high. So let's take Apple as an example. So here you can see a 100-ish% rally for Apple from this level to this level. If we were to rally another 100% from that high, that would have a huge and very dramatic impact on the market cap of the company, and is that move would be a very, very big deal, and is a lower probability event. If we go even further back to the lows, close to the lows of the global financial crisis, to that high, Apple rallied 4,900-ish%. For Apple to do that from that high, I'm not saying it is impossible, but it is a very, 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 very low probability event, because that would mean that Apple would become gargantuan. So back to ZAR, Japanese yen. The bearish long-term thesis is contingent on the red 200-week moving average, the red 200-week moving average basically containing the bulls. The shorter-term thesis is more contingent on, I guess you could say, the PPO triggering a correction like we have seen previously.